Good morning, traders and investors. This week, the US equity held up well, equities, nearing record high as strong large cap earnings kicked in and sentiment around AI and trade improved. At the same time, fund flows cooled and investors remain cautious ahead of major announcement and is still uncertain macro background. So on today's topics, we're going to go over the large tech, also known as the Magnificent Seven earnings, because companies reported their earnings like Apple, Microsoft, Alphabet, Amazon, and many more. And we're going to go over the major earnings that they showed us and also their outlooks for what is going to come. Now, the rally becomes broader as AI and trade optimists support that flow. Fund inflows softened even through tech, some money, but mid and small caps saw some outflows. Commodities saw mixed signals. Oil held, gold under pressure from strong dollar. We already talked about this the last video. And also we got to go over the trades, the stock trades that I did and the options trade that I did and how I managed those trades. So let's just jump into it. And see, the market was mixed on Friday. This is the market on the Friday close. Let's go over the major indices. So S&P 500 hit the new major high on the 29th. So we're talking about the last week of October, the 27th till the 31st of October. And the market then closed in a red, although futures are still pointing upwards. So still in a greenish zone. So S&P 500 closed at 6,840. Then we got a NASDAQ closing also in, well, red candle, but greenish on the futures at 25,858. The Dow Jones also closed in the green, where oil then closed in the green, gold in a red, hitting that 20-day moving average, just staying in there. This is going to stay range bound, in my opinion. Also, silver, the same. Great silver trade here. Sadly, I left this trade far too early, but hey, you know. Then copper, also a good trade setup here. So copper on the 20-day moving average, looking to go higher maybe here, but maybe coming also down. Definitely a short, really short trade opportunity here for copper. Again, this is not financial advice. You know very well, I'm not a financial advisor. So this is for entertainment purposes only. If you get some good ideas, then I'm happy. But what I'm trying to do here is build wealth and also protect it, conserve that wealth that I'm building. Okay, euro dollar weakening, also pound weakening, and the Japanese yen. Let's just go here, also going upwards. So this is the dollar to the Japanese yen. So dollar strengthening against Japanese yen. And I think we're going to see this trend going upwards. So this is going to come back down. That's the 20-day moving average going upwards once again. Bitcoin having its I don't know what to do moment. So it's going to flip around here, maybe do a much larger correction. It still has a major support zone even here or even here. So here we're at the 88,000. I would definitely buy some major positions in Bitcoin. Okay, now let's go over a couple of earnings because we had a lot of earnings and we're going to talk about them right now. Starting out with a group, Cloud and AI, I'm going to call them. So first of this group will be Microsoft. The numbers were excellent. Microsoft reported revenue 77 billion, a 18% year-to-year yield, and a GAAP EPS of 3.72. And Azure grow 40%. That's the cloud business. Okay, so Microsoft's cloud revenue grow 48 billion, capex and AI investments stepping up once more. So the outlook is as following: management dressed a planet, and this is a quote, planet scaled cloud and AI factory. That's just amazing. Let's go. Commercial RPO around 392 billion, so 51%, because a signal of durable demand. Now, near time, a couple of margin headwinds from AI capex acknowledgement. Basically, they don't know what to do with the capital expenditure, but better to spend now and not win the race. So Azure AI were mentioned, Copilots set to uppeak, capex cadence versus free cash flow, and we're going to see a first quarter of 2026 guided to intelligent cloud. So everything okay here with Microsoft. I will still wait for a good pullback. We need a pullback in Microsoft in order to add some long-term holdings here. So if this is going to come down, test this little 100-day moving average, but it's already at the 50-day moving average, just bounce back from the 50-day moving average, didn't close on it. And if it's going to come down here through the 100-day, I'm surely going to open a position, 200-day, add to that position. then wait till, look here, draw here a beautiful, beautiful resistance zone when we can then add to this. So down here somewhere where 550 and then down to 400. Oh, sorry, 450 till 400 is the zone where I will be much happier to add to Microsoft. Okay, let's move on now to the next one, which is Google. Reported the earnings with 100 billion quarters. Amazing. Revenue 102 billion, 16% year-to-year growth, EPS of $2.87 per share. Google Cloud 15.2 billion. There's a 34% growth. So Asia just ripped it with 51%, but Google Cloud also 34% low. Search and others 56 billion, so it's a 14% growth. And of course, they guided for a capital expenditure, so capex lifted to around 93 billion for AI infrastructure. So who's going to get that billions? Well, maybe Oracle. I don't know. Now, the outlook for the future is as following. The CEO emphasizes a full stack AI combination. Full stack means a combination between search, YouTube, and GCP. Now, cloud backlog visibility improved because expenses are much more disciplined, excluding one-offs, meaning that they're seriously taking a look at their expenses, which I love in a company. Watching expenses is just what I want to watch in a company for me to know that that is a good managed company, and the CEO is just good. Now, what to watch for in Google for the future? AI overview impact on search ads, that is, cloud growth and margin expenditure, and YouTube RPM and shorts monetization. So your shorts are already extremely strong, competing up there with TikTok. Next up is Amazon. Amazon, after earning, just rip higher with revenue. Let's take a look here at 150 billion, EPS $1.95 per share. AWS, their cloud business, grow a growth of 20% year to year, with segments on operating income 11.4 billion. So we're just talking here about billions. Now, net income included 9.5 billion gain from Anthropic investment. So stock jumped, as you can see here, after their earnings. Gave it a little bit back. I'm not invested in Google, nor am I in Microsoft, but I am in Amazon. So I was really happy on this result. Okay, outlook. Yeah, workflows fueling AWS, reacceleration, CapEx plan rising. With CapEx expenditure, they're planning to go to around 125 billion in 2025. So they don't have that more to go. So it would be interesting where they're going to invest it, 125 billion in AI data centers. And they're, of course, the retail efficiency, because we are buying on Amazon, is continuing. Now, what to watch for here on Amazon? AWS growth is critical for this stock to continue to grow versus their peers. So they have to beat Google Cloud and they have to beat Azure. AI services attach to rates and a capex payback, because they're investing in this stuff. We also want to see some paybacks on returns on that investment. Next up, we're going to go to Meta. Meta reported earnings and the stock just went down the sewer. Now, their revenue was great, 51 billion, record even. EPS $1.05 per share due to 50.9 billion non-cash tax charge. Now, there was something with remember Zuckerberg went to Trump there and said, "Hey boss, that's right what I just said with my investments in the future." Yeah, that's just perfect. But they still had a tax open, so they didn't play cash. It just was a on paper. Okay, so they're planning to do a capital expenditure 72 billion around this there, and a OpEx operation expenditure of 116 to 118 billion. Now, you do remember that Meta, they're kind of all over the place. And this is also why the stock went down. They're firing, then they're hiring again, then they're firing again. They don't know what to do. They don't have the freaking device. That's their problem. And so let's just think about it. From the Magnificent Seven, this is why the stock is down. Meta, although they grew Facebook, Instagram, Threads, everything, they grew their user base once more, so they're going to keep growing until the population is expanding, but they don't have any device and they do not have a cloud. Okay, so if we're going to see a major correction here, although this is setting up be a short-time trade here on Meta, I'm going to watch for this definitely. So if they do not do something, also Llama is lame. Llama is lame. And if they don't do something to excite the investors, then they're going to just go down, down, down with the stock right here. Okay, so outlook, aggressive AI build out. There's just a couple of notes that I have taken from their report and also the earnings call. The training inference plus devices, management flags, even higher infrastructure spend in 2036. Now, so what should we watch for here in Meta? First things first, ad demand versus rising AI capex and AI glass uptake, although I want to wear those glasses, and Reality Labs discipline. So Reality Labs, I think it's a flop. Glasses, nobody's going to wear them. Maybe so where I could see those glasses really take off is in some kind of industry, in medicine, in assembly, maybe. So there's where I see potential for those glasses. Now in the day-to-day use, do you want to see people walk around filming other people? I don't know. Not for me, but I also have to say with the glasses that if they can do glasses, anybody can do glasses. Nothing that's going to differentiate those glasses from the competition further down the road. So if they were going to be the first one out with those glasses, it's just like NVIDIA, they're going to build the best, although NVIDIA does have also the ecosystem. That's what they're missing. So if they're going to do those glasses, they also have to create the ecosystem, keep people in those buying those glasses, just like Apple does with its phones. So think about it. The difference between Meta and Apple or Google or even Microsoft, because also Microsoft has that ecosystem with Excel, with Outlook, with Copilot now integrating them. So they do have their Windows, they do have the programs there. Meta just has a couple of social platforms, so that's just doesn't connect there for Meta. I don't know. Okay, let's move on to consumer platforms. Because we talked about Apple, or mentioned Apple, let's take a look at Apple. Apple reported earnings, and here they are. So their numbers were great. Revenue 102 billion. There's 8% growth year to year. Earnings per share 1.85 dollars a share. Record for September quarter, and services all-time high. iPhone revenue record. Perfect. So what's their outlook? They're focusing on service margin mix and device AI features to extend upgrade cycle. And also China softness noted by their coverage. So they're not selling that many iPhones in China, which is impacting their margin. Also, what to watch for? Well, service growth, trajectory, iPhone Pro mix, and one device AI feature influencing the next year demand. So I think iPhone 18 is going to be the one that is going to boost their refresh cycle, but we will see. I do own Apple, so I just ate the microphone for a couple of seconds there, for a fraction of a second even. But not that bullish on Apple right now. I love Apple. Not only the stock, the products also, because there's a difference between the product and the stock. Product is great, stock is, so is it at, new all-time high, it's great for it. Let's do here a Fibonacci extension. Let's see where we are. So the last one was here, and there we go. So we're up there in the nose bleeding seats, a 161% extension from its prior lows. Is this a extension of what? Of NVIDIA? I think so. Of Apple. Now, could this go even higher? Of course it can. But I would say for now, let's just leave Apple alone. Just like leave it a little bit alone. Let's see if they come out with something that's really going to tickle their stock for the future. Okay, let's move on to the next one. Next up, the next company that reported earnings. The stock cannot report earnings. It doesn't know that it exists. Also does not know that we own it. Starbucks reported their earnings and just crushed it to the downside. So Starbucks reported their earnings, revenue 9.6 billion, 5% year-to-year growth. Global comps plus 1%. Wow. First positive after 7 quarters. The former Chipotle, we're going to come to Chipotle just in a minute. The former Chipotle CEO really trying there, because non-GAAP, also GAAP EPS was 0.12, non-GAAP EPS 52 cents a share below, and that is below expectations. Now, a turnaround initiative underway, but it's still turning around. And don't forget what Charlie Munger used to say, most turnarounds do not turn around. So let's move on to next stock, which is Chipotle, or next company. Again, stocks do not report earnings. Chipotle massively sold off after their their report. Is this the time to buy Chipotle? Is this the time to buy the bottom? Well, this would be the third bottom. If you take a look down here in the RSI, first on negative, or went down to 23, then it went down to, let's just wait, went down to 22, and now I know where it is. Not know where it is right now. It's down at 18 RSI relative strength index. So I am in this stock. What to do next? I do not know. Honestly, this stock's just okay. Let's go over the earnings. So they reported 9.6 billion, 3 billion, 7.5% growth year to year. Comps went up 0.3%. Restaurant level margin 24.5%. Diluted EPS 0.29 per share. 84 openings, 64 Chipotle lands. Okay, so outlook is 2025 comps low single digit decline. So they're still expecting this to decline. So I would wait one more earnings call here in February, and let's see what Chipotle does there. So do not buy the stock here. Not financial advice. I wouldn't buy the stock here. Okay, maybe it's going to turn around, maybe not. Maybe this is the time to it's going to go upwards. But just take a look at here. If you would have done the same thing here, then you would just catch a falling knife. So Chipotle going down, sits its peak in June 2024. Let this stock just hit a little bit of rock bottom. I think it's going to be down here somewhere. And after its 2 or 3 year bottoming out, then the stock is going interesting once more. Until then, I'm not going to be interested in Chipotle. Maybe I'm going to add just a tinge here and a tinge there, and maybe a tinge later on, because I cannot tell you where the bottom is. Just let's be honest, nobody knows where the bottom is. If you are a long-term bullish on the stock, then you know that these are actually great buying opportunities. If they're not, then just move on to the next stock. There's so many stocks out there. This S&P 500 stocks only in the S&P. There are a lot of there are stocks for everybody out there. Next company that we're going to talk about is MercadoLibre, ticker symbol MELI. Outside of the US, but a great company. Numbers were up. Just take a look at these numbers. Revenue 7.41 billion, up 39% year to year. EPS 8.32, which is a miss. But loan book 11% or 11 billion. That's 83%, and delinquency is 6.8% from down from 7.8%. Okay, so the outlook for this company, FX and taxes in Argentina are weighing on the stock. Fintech growth robust via credit cards. This is a kind of a fintech-ish company. This is kind of the Amazon of North America. Okay, wait, no, so not of the US, of the other side. And last but not least, you should the outlook for the future is there is going to be growth. So I'm very bullish on this stock. I love this stock. I own this stock. And we're going to talk about this on the next chapter when we're going to talk about my trades. Okay, next company. Let's move on to the powerful, the all-knowing Eli Lilly wants you to lose some weight because it's currently number one in the weight loss drug. So revenue 17.6 billion, a growth of 54% year to year. Non-GAAP EPS $7.02 a share. Guidance has risen for the year. Revenue 63 to 63.5 billion. So a non-GAAP EPS of 23 to 23.7. Now, Mounjaro sold 6.52 billion, Z-Pound 3.59 billion. The outlook, obesity and diabetics demand powering results, of course. Pipeline updates coming. Oral GLP-1 is also coming. So what to watch next is supply scaling, of course, pricing, reimbursement debates, and oral obesity program results. So if they're going to go through their trials and everything goes as planned, then this stock is going to rip. Is this the time to buy Eli Lilly? Well, I personally am going to wait for a pullback. So on the dailies, they look great in the green. On the weeklies, go here to the 1 week. I'm going to wait for a pullback here in a 780-ish zone. That would be just perfect for me. Pullback here, start adding some long-term shares. Okay, let's move on to the last two companies that were interesting for me at least, and that is in the oil markets. Exxon reported earnings with 7.5 billion gap, adjusted EPS of $1.88 a share, so a beat, and a shareholder return on capital of 9.4 billion, a premium of 1.7 million, and Guana just brought in 700K. Okay, so the outlook for this company, this refinery company, is production strength offsets softer commodity pricing, of course, capital discipline and buybacks continue. So they are going to continue buying back their shares, and they are going to be really disciplined here with their stock with their expenditures. That is why I love this company. So, but it's kind of since 2022 November, it's kind of been range bound here, always being between 120-ish and this $95 a share. So I hope that this right here is going to be the breakout, but I'm afraid this is still going to take a couple of quarters, if not a couple of years, for this to happen. Last but not least, let's take a look at Chevron. Same thing here. Chevron reporting great earnings, 3.6 billion, a record production of 41 million BOE per D, and a downstream profit 91%. So strong cash flow 9.9 billion, and the outlook is as following. They bought Hess, so Hess deal contributing to Gaia. Cost reduction targets between 2 and 3 billion, and buybacks plus dividend maintained. So woo! Also the dividend is coming up. So if you own Chevron, also Exxon, there's a dividend. They should bring their dividend in the next couple of days. So there you go, a little bit of income stream for you, because they do have, let me just take a look at 4 point something. So Chevron has a 4.29% a year, and Exxon has a 3.46% a year. So great dividend there, and always growing their dividend. Now, I'm just going to run over the financial sector. Visa reported great earnings. Outlook is consumer is solid. Boom. That's a thumbs up there. Cross-border growth decelerating slightly, and just look at cross-border what to watch for is cross-border increases in 2026. Of course, their competitor, Mastercard, that's a duopoly. Visa and Mastercard are a duopoly. Also, there's American Express in there. Also, Mastercard, great beat, earnings, EPS. They're talking about the healthy consumer, travel spend, steady margin execution. What to watch for are cross-border momentum versus Visa. So the same thing as Visa. PayPal reported earnings. The CEO said agentic future. That is the future. Partnerships with Google, OpenAI, and Perplexity are coming. What to watch for in the future is branded shares stabilization, a TPV growth, XPSP, and dividend buyback mix. So it's actually good for PayPal. Last but not least, in the financial sector, SoFi reported their earnings, and well, the stock did the following: went up, came back down again, hit this 20-day moving average, and from here on, just going to expect it's going to go further up. That's my expectation. Reported great numbers here: a net income of 139 million, eighth great gap profitability quarter. So think about it. Adjusted EPS 11 cents a share, adjusted net revenue 962 million, members 12.6 million, a growth of almost 1 million quarter to quarter. They rose their guidance, so expanding beyond lending fees based and tech platforms, now over 50% of their revenue. They're re-entering crypto with remittances and planned US stable coins. So what you should watch for in this stock is, of course, if the deposit growth and if their funding costs lowers, credit performance, and fintech take rate in the mix. Okay, last but not least, the company that everybody's watching, because they did this, boom, and then they did this, boom, and then and then it went up a bit after everybody realized that Berkshire Hathaway, Warren Buffett, just bought some stock of it, but it's such a small portion. And they have, of course, let's just say about who we're talking about. UnitedHealth, UNH, reported 113. Come on, I'm going to spit this out. 113 billion, a growth of 12% year to year, a EPS of 2.92, rise the forecast for the end of 2025, EPS outlook to grow $16.25. So Medicare Advantages membership growth to plus 625K, but it is a big but, not over for them, because Optum Health margin are under pressure because they were strongly subsidized by the government there. So reimbursement pressure and elevated utilizations weight on their Optum Health, offsetting by MA growth and cost action. So what to watch for in this stocks is 2026 rate update. So are they going to rise their rates. Is the membership utilization going to go down and opt the margin repair? Because you come to them with your claim, then they're going to lose some money there. Okay, that's it for the stocks. Now let's go over trades. And also, first of all, let's go over next week's earnings, because next week companies again are going to report earnings starting out the Monday with after bell reports of Palantir, HIMS, Realty Income, and that's a name. Also Diamondback Energy in the energy sector. Now following that is Uber, Shopify, Spotify, Pfizer. That's the pharmaceutical company, not Pfizer. Ferrari, stock that I own. These are all before the bell, and then after the bell on Tuesday is AMD, Supermicro Computers, Kava Group. So I'm actually talking about the ones that I'm going to watch extremely for Exxon, not Exxon, the energy company, but AXON. Take a look at this stock. It's really good stock. Pinterest. Then we have on Wednesday, before the bell, McDonald's, Unity, Fiverr, Cameco Corporation. Oh my God, look out for this one. This just went parabolic the last couple of years. Emerson. And then after the bell, we have Hood, which is from Robinhood, Arm, Elf Beauty, AppLovin Corporation. Then on Tuesday, we have Celsius, Vistra Energy, Warner Brothers. We're going to talk about Warner Brothers just in a couple of seconds. And then after the bell, ABMB, DraftKings, where there are major problems. And then we have on Friday, energy sector once more, or utilities, Constellation Energy, Duke Energy. And that's basically it from what I'm watching for. So really exciting week. Now let's go to my trades. So we have had a really difficult October. Currently minus $659, which is 572 euros, mostly from 2 times trades that I did, or sold the short position 2 times. Basically, I had an S&P 500 short outstanding for a really long time, and I sold it once for I had to get out of that trade because the S&P is just growing and growing, and it's not going to get better. Okay, I was coming to the point that the S&P wouldn't have to correct like some over 30%, so forget about it. So I lost $1,500 here and $1,800 here. That's basically it for the month of October, leaving me in a $659 currently negative position. Okay, now let's take a look at the trades that we did last week. So we're going to kick off the week with the first trade that I did, and that is Adobe. Take a symbol ADBE on Monday. That was brought in 21.74 euros. That converts to this gross. And so I'm just going to do a quick explanation. We have in this table above my head, we have the name of the company, the ticker symbol, the date that I did the trade, the gross euros that I got in because I'm using for stocks only, a European app, European broker, and that is netting out because in Europe, or at least where I'm trading, the taxes are automatically paid. As soon as you do the trade, if you do a positive trade, you either pay the taxes automatically, and you're going to get only what remains after taxes. When you sell a stock, is what you're going to get back in your account. And if you do a negative trade, you're automatically going to do that correction of the stock. So basically, the percentage that you will have paid by a positive sell in taxes, in a negative sell, in a loss, you're going to receive back. Okay? And then I'm just going to, so this is the net gross. After 21.74 euros, I got back 15.92 euros, and that nets out in 18 to the conversion rate of $18.54. The current conversion rate is 1.15 euros a dollar. Okay, so that's the rundown of what you're seeing here. Now, next up was Warner Brothers. Warner Brothers Discovery Incorporated Class A shares, ticker symbol WBD. Trade that I did also on Monday brought in 31.2 euros in profit. Now let's take a look at also. Now first I want to go back to Adobe. Why did I sold this stock? Actually, I sold it. Let's see. I sold it on Monday the 27th. So here on a green day, boom, sold the stock. And here I was thinking about adding something back, and I don't know, because the MACD, so the other side is trying to go up there. The MACD is trying to trigger a sell signal. Somewhere down here is maybe a much better possibility or probability for a positive trade than upwards for Adobe. Adobe is not done, but also it's kind of dead money if you invest right now in Adobe, or you're going to invest it and leave it there for a year or two, maybe if the AI race continues and Adobe does not come out with a game plan for AI, then Adobe's kind of that fish in the water. So for all your Adobe shareholders, I hope this is not negative news. I'm just revealing here my thoughts about Adobe. Okay, let's move on to Warner Bros. Discovery. So the story here is as following. Warner Brothers wants to be bought. They're asking for a big price. People think that they're going to get $30-ish a share. I don't know. So each time this goes down and is not being bought by somebody else, another company, I buy a little bit of stock. And when it goes up, I sell that stock because I just know that Warner Brothers is not a company that is worth that much money. They do have great IPOs. You can twist and turn from their new series and do reruns and do prequels and sequels and so forth and so on. But you have to do that. So after they are done and we see something, so who buys them? I don't think that Netflix is going to buy them, although they have a great library, Warner Brothers, but I don't think that they're going to be bought by Netflix. Paramount, well, still they have to pay a lot of money for it. Okay, let's move on to my next trade, which was on the 28th, and that is UnitedHealth Group, ticker symbol UNH. Sold all of my shares. Wait a second, what do I do here? Of 330.91 euros. That is the gain that I had on UnitedHealth. Let's just do a really quick analysis of the stock here, technical analysis. So if you're in here, in UnitedHealth, just think about the following. Currently, you are in a sell signal. For a trade or for a longer investment, if I would do a long time investment, which I consider doing because this stock is going to go up here, 615. To the end of the year, I would bet that this is going to go to 400, even over 400 maybe. This is going to be a great resistance zone after 400, so 450, the 500-ish zone, but 400 is in the stars for them. Now short term, maybe I'm going to wait a couple of days the next week. Let's see what happens. Let's see if this stock comes down even more. There's no rush to buy this stock, let's just say, okay? So that's my 2 cents on UNH. Next up that I traded was Western, not Digital, Union. Ticker symbol WU. I did this on the 29th. Brought in a proud 257, oh no, let me just change this. So 257. Yeah, exactly, 257 because they sold it at a round price. US a share, netting in a $218. Not a share. Jesus. Profit, $218 of profit. Western Union, let's just take a look at this stock. Had a major run, major breakout, overbought, looking for a pullback, looking to add furthermore to the stock. It is interesting, let's just say, at least. There's trying to dabble around there in the stable coin section. So maybe it's going to be bought out, maybe not. It's an interesting stock. At least it's an interesting stock in this interesting stablecoin era. Okay, next one is Meta. Meta platform, ticker symbol Meta, META. I did this on the 29th. Just taking a look at my notes. 49.4 gross euros. Brought in this one as profit. Let's take a look at Meta. Tell you what my thoughts on Meta. So I did this trade just before the earnings call. So not the earnings call, the earnings on the 29th. Here, and that was the last green day for Meta. From there, it went down, and let me just go back to Meta here. They are underneath their moving average, the 200-day moving average. Take a look at the weeklies, where Meta is currently right in this beautiful zone on the 38 till 50 Fibonacci retracement. Now this stock is getting more and more interesting for a trade in this zone. So if it's going to come down furthermore, man, it really add very interesting trade. I would say this is setting up for an interesting trade environment here. But you will have to wait, maybe. So I don't know where the bottom is. This is going to catch a bottom because they are adding members and they are profitable. So just that they're really not hanging in there with the capital expenditure and what they're going to do with it. We need to see some returns on that capital expenditure. So that's my 2 cents on Meta. Looking for my part to add to a trade here. Okay, let's go back and let's go to the 30th. Tuesday. First stock that I trade, Exxon. Ticker symbol Exxon. AXON there is. Okay, 121.98 profit gross and then a net of $103.52 profit. Exxon, great company, had a major run up, took some profits, looking for a pullback, looking to add back once more. I just reduced my shares, and they do have their earnings. Look at their earnings here. Next week, we talked about it here. There we go. On Tuesday after the bell, definitely peel your eyes for Exxon. Keep your eyes open for Exxon. Let's see what they report. Let's see, is it good? Is it bad? Is it definitely a great company? Perfect. Let's move on. Next trade that I did is Microsoft. And you guessed it, I did this trade also on the 30th, which is after they reported earnings, went in there, came back out again with 19 euros. So just a small trade. Not going to talk much about Microsoft here, just mentioning the fact that they are currently in a sell signal. Let them sell off and then look for a comeback in this stock because they are firing out of all cylinders. Another one was Interactive Brokers. Ticker symbol IBKR on the 30th. Brought in proud 28 euros. Hey, small, but I'm making money here. So that's making and protecting money. Well done. And also currently up for October, $69.84. So not going to talk too much about IBKR. Great company, good earnings. Let's go to the next one, which was also on the 30th. Did a lot of trades on the 30th on Tuesday. And this one was it starts with A, but that's the ticker symbol. It's Broadcom, AVGO. On the 30th, brought in, sold all of my stocks. So I completely sold my Broadcom stock, 227 euros. And that brings us to a $192 profit. Next up, also on the 30th, I reduced my position in my MercadoLibre, ticker symbol MELI. Sold a bit and got a bit of 162 euros. A nice little win there. This brings me to 149 net dollars, increasing our October to $412. Let's move on to the next one, which is Apple Incorporated. Ticker symbol AAPL. Reduced my position also on the 30th, bringing a 248.23 euros. Basically sold one share. Not going to talk too much about Apple. Already did in their earnings presentation. You know my position on Apple. Next up is Amazon. Ticker symbol AMZN. Also on the 30th, basically after their earnings, sold a little bit of Amazon, brought in 83.32 euros, which is a net of $70.71. And last but not least, got because it's the end of the month, interest on cash hold. Currently, we getting 2% per year, and my cash level was pretty low, was pretty much invested, so 30. Oops, cash. I just said it was of the 31st, and this is going to bring us to 33 euros, grossing in at $28. Okay, finishing up. So the last week, or this week, we brought in almost 1,200 euros net. That is $1,380 net, the conversion rate of 1.15, and ending our October in the positive. Finally, 721. But we're not finished because they're dollars. We're not finished because these were my stock trades. Now let's go to options. Options is, I still don't know how to integrate options here. I'm trying to figure it out. So we're just going to go to the platform. So in options platform, I want to show you the trades, how their life cycle of the trade was. So let's go to the first trade that we did, and that is AMD. These are all trades. I'm going to reduce this to the last 7 days. And here we go. We opened up on the 24th of October, the trade, and we closed it on the 27th. And this was a strangle. Would have ended in 21st of November, 28 days to go. When I opened the trade, got for 4.28 credits, and opened the trade, ended up with 3 and sold it for, or bought it back, because you're selling it when you're receiving credit, bought it back for 3.80, bringing me to $48 profit on this options trade. AMD was really great for me this year. In fact, we're on 365 days. So we're currently up on our AMD trade, $367. How much I made until now on AMD. Okay, let's move on to the next one. Also, here I'm not going to analyze the stock that much. Options trading is a bit of, doesn't really have to do that much with the actually with the fundamentals of the company, not that much with analytics, with technical analysis, and so on. Also, when you're opening with a strangle, you're kind of neutral on that position. So you just have to defend that position as you progress in time with the trade. Okay, next one is IVM, which is the Russell. So sadly, this was a loss for me. Open up with an iron condor, rolled once, open it up on the 22 on the 22nd of October, rolled on the 24th for 1.64 credits here, closed it up, so buying it back by 5.21. You can see here this sum does add up to a negative $40 loss in this trade. Next one is Shop, Shopify, ticker symbol Shop. This was, man, I fought so long for this stock, but it just went nowhere. So open it up with a strangle, rolled once, open it up on the 2nd of October, rolled on the 6th of October, rolled on the 13th of October, rolled on the 17th of October. This first I rolled the put, then I rolled the call, then the put again on the 20th of October. Then I rolled the put once more on the 21st of October, and on the 22nd of October I rolled the call, and on the 27th of October I was just gone with this trade and I had to close it up, ending the trade in a loss of $273, and that's just it. Okay, here are no tax gains or losses. This is going to report at the end of the year. I have to report it here in the country that I'm currently in, and if I'm going to end in a loss and end up in a loss, then I'm going to receive some taxes back. If not, you know what happens. I have to pay some tax. I'd rather pay some taxes instead of ending up negative here. Okay, next company, MMM, which is 3M. Open up with an iron condor on the 20th of October. 22nd of October, rolled for a credit, rolled everything. Actually, rolled the puts up, then rolled the puts up once more on the 24th of October, and then closed everything on the 27th of October on a loss of $108. Next up is natural gas, Harry Hub Natural Gas Company. Opened up a iron condor, rolled once more, roll once more, roll once more. So just roll the boat until I close this up in a loss of $200. Maybe if I would have hanged in there more, because I did have the 24th of November as expiration day, so you can see it's a really long trade that I opened here, but it was hard. Also, each time you roll in the futures, it's really expensive. So you see also here commissions and fees, it's take a look at this, 27.5, 42.2. So this is on the top of these 200. So I had a really big loss here. I just had to cut this off and close this, because I think my calls were already in the money, so they were getting really expensive. Okay, next option, NVDA. Nvidia made a small options trade here, opened up with a put, sold the put, opened up with all guns blazing. And you know what? Take a look. So open up a put on the 27th. Let's go here, 7th of October. Closed it on the 28th, but closed it in the morning. 2.40p, that's post meridian, and that's basically 8 or 9:40 in the US. Because we're closing daylight saving now in November. And if I would have waited, man, would this be a beautiful win? But I only got $26. But you know what? Sell, win, and regretted it more. That's my philosophy. Let's move on to the next one, which is Starbucks, SBUX. Pick a symbol. Opened up here a naked put, sold the put on the 27th, rolled it on the 29th, closed it on the 30th, and there we go. Beautiful $35 win. Mwah. Moved on from here. Good job. Next one. So you can see in three days, boom, $35. That's great. Next up was GDX. This is the gold miners, so the regular one, not the junior. Opened up with a naked put on the 28th, closed it up on the 29th, got myself $32. Moved on from here. The next trade, which was in US oil. You're seeing here too many of them, so I'm currently up $23, but only in the last week I did only one. So open up with a naked put, close up that naked put on. So open up on the 28th, close it up on the 29th, brought in $13. Moved on, because oil is just, right now, I don't know what to do. War, no war. Peace, no peace. I don't know. Be careful with oil. Okay, next up, a very nice company, Oscar. Pick a symbol OSR, Oscar Health. Still a nice trade here. Open up a naked put, close it up $11, but I was lucky. Let's check it out. Open it up on the 22nd. Boom. On a red day, open this little puppy up. Then I had a couple of hard days. 23rd, 24th. Boom. Then on the 29th, it had a small move upwards, hit that sweet spot, close that trade up, $11, moved on. If not, I would have, well, this Could have ended badly because as soon as this happened, we're talking about hundreds of dollars, and this was naked. So this stock is 18 bucks a share. You're always buying 100 shares with a naked put. So $1,800 would be I have buy the share or close the position in a loss. Maybe I would have ended buying the share because this is a good stock, really good stock. I always trade good companies with, look here, liquidity, high liquidity. They are going to report their earnings. So maybe let's see what happens. Maybe play some earnings here. Okay, let's move on to the very last trade that I made. Of course, it's in AMZN, Amazon. This was a nice trade. The very last trade is a nice trade. Opened it up on the 29th, rolled once that day. So I did 1 day trade, which is extremely dangerous. You only have 3. The 4th one and you're gone. Well, not gone, but you're a PTD, a patent day trader, and you're going to have problems from that. So opened up, rolled it once for a credit, and then closed it up with $250 in profit. In just 3 days. 3 days. That was a beautiful trade. Okay, that's it for me. Hope you enjoyed this video. Don't forget to like and subscribe to the channel, but hit that like button, please. Help me. I try to grow this channel. If you like the content if this content brings you any kind of value, hit that like button. Consider becoming a follower on this channel. Also later on, we're going to have memberships. We're going to review portfolio analysis. How am I building my portfolios? How I'm growing and protecting wealth, because that is essential for your future. Ladies and gentlemen, I'm Noble PM. I protect wealth. Catch you next time. Bye.